Should you buy a house in 2025? That is the question that I want to ask you today on this episode of the Never Lose a Deal podcast. Welcome. My name is Lorillia Brown-Phillips, and if you are here, you are a real estate investor who likes the idea of having various financing and funding techniques to be able to expand your real estate portfolio. And that is what I mainly talk about here on the Never Lose a Deal podcast. I primarily talk about funding and financing. And so today, I want to talk about what is currently going on in the market. And that has to do with a very boring subject, which is economic data and buying a house in 2025. Now, like I've said, and I've said in other episodes, now, primarily individuals who would be interested in this podcast are real estate investors or business owners who are not new to real estate. So a lot of the things that I talk about today are, today or any other episode are not elementary topics. I'm not talking about house hacking. I'm not talking about how to buy a house with FHA. I'm not talking about how to buy a house with a very little amount of money down. Many of the topics are very expansive. But today it's going to be different. Today it's going to be very elementary. And the reason why it's going to be very elementary and it's not going to be a long podcast is because I was asked this question by a few people. And I wanted to kind of give some context to those who may have this same question. Now, currently, right now, as I film this podcast, 2025, it is August. And depending on where you are in the country, you may say that the real estate market is doing bad. You may say the real estate market is doing good. And you may say that the market is holding steady. And I have to say, based on economic data, that is true because it is not a overall one way of how the market is doing. Currently, right here in the tri-state area, that's New Jersey and New York, we're holding steady. Values are skyrocket out the roof. How long will they stay there? Don't know. But there are other parts of the country where it's a bit shaky. And so the question was asked to me. Few people sent it to me and said, "What are your thoughts, Lorillia?" And like I said, this topic is very elementary. The topic was about, should you buy a house in 2025? Now, once again, given context, I asked the individuals, well, when you ask that question, who are you asking that to? Are you asking it to the first time home buyer, or are you asking it for a real estate investor? Because real estate investors who are actively buying, who are actively interested in expanding their portfolio, scaling their portfolio, creating wealth strategies that will help them lower their taxes, increase their retirement options, are still buying and are actively buying. But the first time home buyer may be a little hesitant. Interest rates are not desirable. And I always say we got to give context to that because I can understand that the first time home buyer may say, well, the rates are high. And a lot of times they are comparing it to where they were post pandemic when we were at a very low interest rate market. But if you ask somebody to compare it to the early 80s when we were in double digits, the rates are good. And one may say, well, Lori, when we were in double digits, home prices were lower. Yes, that is the case. And so that leads me to economic data. So a video was sent to me about a person who was giving their insight on, and I guess this person is a social media or a influencer. Person looks rather young, could be in their 30s. And they were saying that buying a house is a bad investment. And I told the person when I spoke to two people, I said, let's zoom out for a second. When we listen to the video, the video sounds like it was very opinionated. It was based on this person, looks like, based on what they were saying, they've attained, some economic wealth or financial stability. And they were giving their insight on should they buy a house or should people buy homes. And I felt like it was and I've been hearing a lot of these conversations, on the internet. And a lot of them are never supported with data, which is why I titled this podcast Economic Data and Buying a House. It's never supported by data. It's supported by the opinions of the person's outlook on life. And if a person is in their 30s and they are giving their opinion about buying real estate, this is, once again, I'm looking at the data. If they are not supporting what they are saying by data, meaning they're showing the data, but they're just giving an opinion based on what they may be economically, I'm not going to listen, because this is what I know. If the person doesn't have any economic data to support what they're saying, then they're talking from a place of not knowing, because they have never been in a topsy-turvy housing market. The last topsy-turvy housing market we had was in 2008. So now I'm going to go into, let's talk data. If the person is in their 30s and the person looks like they could have been around 35, I'm even going to push it to if the person is 40. If the person was 40 in 2008, no, the person's 40 now. In 2008, they were roughly in their early 20s. The person was 35 in 2008, they were roughly a teenager. Unless they are talking from the standpoint of economic data, I'm open, because it's not about age. It's about, if a person is giving an opinion on something, because it's really opinionated and it's not supported by data, it's just supported by, this is my lifestyle, this is how I'm living, this is this is the amount of wealth I've attained, and I feel like you shouldn't buy a home, you may want to question if you want to listen to that. Because I tell people, men lie, women lie, numbers don't lie. I tell people all the time, even if I'm giving advice to a client, you have the economic information in front of you. Because I tell people, I have no problem with individuals fact checking what I'm providing to them. And so, what I want to relate here on this podcast, you want to fact check based on economic data and trends if you should listen to a person telling you, should you buy a house in 2025? Now, I'm going to give you another example. This is not opinionated. This is data. So you can have some standpoint, because a starting point, because most people say, well, Lorillia, how can you examine without being overwhelmed, and everybody's brain is not designed to really unpack and zoom out and look at the data. I tell people from a very elementary level how you could do this. Look at where you were living. I don't care if you lived in the heart of the hood, in whatever state or city or town, USA, or you've lived in a suburban area, or you've lived in a wealthy area. I want to ask you a question. This, like I said, this is very elementary. Where you was living in 2008, and it doesn't matter if you were renting or buying, go back and see what was the value of that home back in 2008. And for the chat GPT folks, AI can tell you this. Based on this particular, you can put in the prompt based on this particular address or area, what were the home values of those homes in 2008? For those who want to chat GPT, because of course it's the internet, nobody wants to read, everybody wants information given to them. And then ask chat GPT, what are the values now, 2025? And I am going to guarantee, and I don't need to know your market, wherever you are living in the US, but I'm going to guarantee one thing is certain: the values have increased. The price of a house, even if you was renting, and now, of course, I'm not talking about if you lived in public housing, affordable housing. If you did live in affordable housing or public housing at that time, then ask Chat GPT in that area, because there were homeowners who did buy houses in that particular city, state, town, or what have you. And now compare it to 2025. You have a starting basis for your economic data. What I'm going to guarantee, and this is without me knowing every little nook and cranny on the map in the United States, the values have went up. Values have went up. When values go up, there's something called appreciation. That appreciation, which is the middle piece, what the house was worth in 2008, take into consideration, once again, gonna give some context. Take into consideration, then the person didn't refinance, they didn't do, they did pull any equity out. Let's just look at the person had a home or bought a home in '08. I'm not even gonna say had. I want to be very, very on point. Person bought a home in '08. That person still owns that home in 2025. No type of refinance, equity was taken out, whatever. Of course, topsy-turvy, interest rate market. People are going to say, well, who was buying homes in '08? The real estate market tanked. This is what your 35-year-olds and your 40-year-olds are going to say, because they were like kids pretty much. And unless they came from a family that was actively doing anything, all they know is what they've heard. So they've heard that it was doom and gloom in '08, but there were still people buying. It may not have been in your circle, but there were people buying. Because I tell people all the time, this is not based on opinion, but I know 2008 is when my career in real estate skyrocketed. How? Because I was working with investors who were buying. They weren't sitting on their hands talking about, we're going to wait it out. They were very clear on what they wanted to do. And I served as the conduit to be able to provide the homes that they were looking to be able to purchase. So I say that to say, for people who say, well, who bought a home in '08? No, there were people buying. Everybody was not destitute and the bottom fell out or what have you. So just for the people who feel like, nobody was buying in '08. Because like I said, if the person is on the internet talking about don't buy a home in 2025 and they in their 30s and maybe even 40, all they're going about what they heard. Because once again, if no economic data was shown, that's all I can go on. Like Understand if a person is showing data, but the videos that were sent to me, they were all opinionated. So going back to my economic data example, bought a home in '08, held on to it. It's 2025. You've gone through some economic cycles. We've had a couple of presidents within that cycle. We've had the pandemic during that cycle, and now it's 2025. I'm going to guarantee, like I said a few minutes ago, the values of that home has increased. And that in between piece is called appreciation, which is where wealth begins if it is treated right. There is not a rental property that you can buy that is going to give you appreciation, because being a tenant does not provide that. The person who rented in 2008 and was still renting in 2008 and now it's 2025, that's all they got, is just a security deposit. That's it. But the person who bought in 2008 and held on it for 2025, there is appreciation, which is one of the beginning pillars of building wealth. Ladies and gentlemen, that's data. Because regardless of what anybody says, they can actually see, oh, wow, I bought this house for 100K in '08, and it's pretty much worth 800,000 here in 2025. And for those who are like, Lorillia, those numbers don't make sense. Like I started this podcast episode off with saying, every market is different. That's what it looked like in New Jersey. There were people who actually bought real estate in '08, and now it is worth this amount, which is why I have family members that I have to share this with so they can get some context and understanding of how this game of Monopoly works with real estate. I have a relative right now bought a multifamily with a whole nother lot for a driveway back in 2000 or 1999. Bought it for like 100K. That same home is worth, like I said, 800K in the city that people would say is crime infested, and it's probably, people would say it's the worst place to live, and that's in the city of Newark in New Jersey. And there are similar cities just like that all throughout the United States, which is why I said I don't need to know every nook and cranny on a USA map to say that you can't find that same example somewhere else. Now the numbers don't have to be that big, but there is a gap. And that gap in between is appreciation. And that is the part that either those who are telling you not to buy a house don't understand, or you're being bamboozled not to know. Because if a person really understood the power of appreciation and how it can pretty much propel you to build wealth, they would never tell a person not to buy. And if you don't believe what I'm saying to you, once again, data. Read data that held many people from buying real estate. There were actually laws in the United States that prevented people who looked like me to be able to own real estate. So if what I just said was not economically powerful to be able to be one of your cornerstone building blocks to build wealth, then why was many people not given the opportunity? Well, ladies and gentlemen, now in 2025, you have that opportunity. So I sum it up with saying this: when you understand the correlation of appreciation, equity, buying real estate, like I said, it is one of the pillars that can literally change the direction of your family if understood. Because, like I said, everybody doesn't understand it. I just explained to you that I have family members, or I've had family who pretty much have let real estate go because they didn't understand how this game of Monopoly works. And it's sad when you hear talking heads on the internet talking about that. Now, let me just say this: there's a very well known real estate influencer who talks about why buying a home is the wrong thing to do. And this person is a huge real estate influencer. But when you really put, and once again, I follow a lot of what the person says. I agree on a lot of things, but I also understand that the conversation is taken from the context of that person's world. That's what a lot of people don't understand. A lot of people don't know how to listen to things and say, okay, that's that person's view of the world. That's why in this example I gave you has nothing to do with opinion. This is research that you can do. This is research that you can do by looking at your market, examining data in 2008, comparing it to 2005, and tell me there was not a gap of appreciation that took place. There's no way you could tell me it. And it doesn't have to be, like I said, New Jersey numbers where you could have bought real estate for 100K in the city of North New Jersey, and now in 2005 in North New Jersey, that same home can be 800,000. It doesn't have to be that level of appreciation, but there is some appreciation, even if it's small. At the end of the day, leverage is leverage. Doesn't matter how small or how big. So going back to this very well-known real estate influencer that's online, I get what that person is saying from the context of that person's world. From their world, it probably makes sense, but it's not the world that probably will relate to you. So I say this: make your decisions based on data. With it being 2025, like I said, if you're new to real estate, that's buying your first home to live in, or you being a first time investor, make your decisions of buying a home based on data, not based on people pulling on your strings, economically, I mean, not economically, emotionally, and just saying things that make you feel good. Really look at the numbers, because like I said, I'm just touching the surface of when I say data, but I just want to give an example of what I mean, because a lot of times you could say that word and people don't know, well, what do you mean economic data? And like I said, I'm just giving a very elementary example of what that will look like. So when you are faced with, oh, should I buy a house? Like I said, would you rather have rented and been a renter for '08, from '08 all the way to 2025, and you don't own nothing? All you have is a security deposit? Or would you had rather been a homeowner and had all that appreciation? that you can now leverage and create any type of wealth building prophecy plan that you have for your family or maybe just for you. So, once again, like I said, I'm already at 25 minutes. Didn't want to make this a long podcast, but just wanted to give some context to that conversation. And that's how I had that conversation with the person who brought it to me. I did not talk from the standpoint of opinion, what I think, this, that, and other. I just looked at data. And like I said, I'm not listening to anyone who's younger than me from an opinionated standpoint. If the person comes with data, by all means, you know, you, that's a whole different story because it's supported by information that has been studied and is documented. I listen to that all day long. And then I can literally make an educated decision on what the person is saying. But when a person is just talking from opinion and from conceit and just and and just I guess swagger, it's just not it's not supported by anything. So as corny as that sounds with the information that I shared, when people ask what separates those who become investors who are able to invest in any market in any economic cycle versus those who just sit on the sideline, is that they make decisions from data and not from emotions. So going back to that video, that was a very emotionally charged video, but it wasn't supported by data. And so if you're looking to be able to win in this real estate market, and you are a real estate professional, like I said, real estate investor who is looking to expand their portfolio, being able to leverage different forms of capital, let's have a conversation. Go to www.leverageportfoliocapital.com, or you can go to what's on right here on the screen, www.neverloseadealpodcast.com. There you will find a lot of resources that I can share with you. But until the next episode, I will see you then.